If you're familiar with Ponzi schemes, that is exactly what I just described. Here we're going to be going over 4 ways that the monetary system could be more efficient. Don't forget that subscribe and the bell icon so that you never miss out on any of our future content. What is going on? My name is Daniel, and welcome back to Money Recall. So first off, we're going to start with the basic transactions that go on. What is the biggest difference between when you swipe your card and when you pay with cash? The biggest difference is 3%. Yes, 3%. When you swipe your card, the company usually gets charged about 3% to actually use their services and card machines in that financial transaction. When you pay with cash, there is no fee from a bank. So for every single transaction, imagine if you could wield the power of getting 3% of GDP every year. Now, I know it's not like exactly 3%, but that's how much is being raked over and pulled in, minus like 10% that's done in cash transactions. So imagine being able to pull in that much money by offering people the ability to swipe their card. So I think that there's a better way that we can do this, and the only way that I've seen thus far, and this is probably going to be the biggest revolution for blockchain technology, is these payment methods that cost so significantly less. Stores at one point were actually switching over to Bitcoin, accepting Bitcoin online, because they could have so much lower transactions. They move over to things like litecoin. Number 2 would be directed at the government. They need to stop incentivizing risk in the banking sector and industries. The major ways they do this is by ensuring banks from failure so that they can then take as much risk as they want and go as close to the edge as they want, and they will be bailed out for taking all the risk. It pretty much transfers the risk over to the main public, which is a really bad idea because bigger risks happen. The second way that they do this is by pumping money into sectors. For example, the housing sector and the student loan sector. So the housing market, they obviously had things like Freddie Mac and Freddie Mae, all those wonderful things, and all the ways that they tried to get people into homes, which is, it's a really admirable goal to get people into homes and live the dream. But the adverse effects are sky-high housing prices. Same exact concept with student loans. When they make sure that everybody can go to college by making sure everybody gets a loan, they raise the price to a point where almost nobody can afford it. Number 3 could be a public shift. This would be a shift from big banks to small banks. So if you're using Chase, cut that out and go to a credit union. Credit unions tend to suffer much less during downturns. They keep their loans local. They're more usable for smaller communities, and they will give out loans to small businesses, whereas the big banks are focused on big loans because it costs the exact same amount to write a big check as it does to do a small check, but you make so much more money off the big check. Big banks have their purpose, but I think that they're too big at the moment, and the universe would be better off if everybody went to a credit union style. So this would be a shift from big banks to more credit union style banks. They provide better customer service, they provide smaller loans to smaller individuals, and they help local economies and local businesses, all things that we need to start reverting back to. And the fourth and final one is how the money is created. So currently the money that you're using today was created by a loan yesterday that was to pay off another loan before that, plus interest, and then extra to create the money today. If you're familiar with Ponzi schemes, that is exactly what I just described. So moving away from this style of money creation, just this alone would probably eliminate a lot of the taxes, and then create more stability in the money supply. This also boils into an elastic money supply so that it can become bigger or smaller, but really all that elastic means is less stability. So this has been Money Recall. Let me know what you think of this list. Do you have any others that would be a great idea to improve the economy's efficiency and the monetary system? Let us know down in the comment section. Don't forget to like and subscribe.